Good evening, everybody. Can you all hear me?
Good evening, sir. We can hear you, sir.
Okay, thank you so much. Sorry for last week. It was terrible network problem. The question we are solving last week. Let's quickly go through the question again. Yeah. If you go to the financial statements, you will see there. It asks us to consolidate statement of profit or loss, statement of financial position. In exam, what is my own duty? For the POL, open. But to start investment in associates, it unfortunately there's nothing we can do. Okay? No problem. Question is aya. See, let me pick my pen. Aya. Good. But that is done. You also consolidated. Statements of profits or loss and other comprehensive income. For the year ended, which year ended 30th September 2017. Revenue, cost of sales, gross profits. We have distribution, costs, admin, expense, finance costs, profit before tax. We have profit before tax, then profit for the year. That is the first thing on page 1. But I will start with statement of financial position. I will only start with right in first page. I'll go to the next page. Okay. Consolidated. Statements of financial position as at 30th September 2017. Good. No current assets, PPE. The PPE for the parents, you have 1,299,200 plus that of the subsidiary 403,200. I'll write the goodwill. Immediately after the goodwill, I leave a line space or two, maximum 2 line space. Go to the current assets, which is 512,000 plus 211,200 total assets. I'll go to the equities and liability. Equities and the liability. I quickly open. Equities and liabilities. Share capital. Share retained earning. Before the NCI leave a line space because of 2 things. The question cannot carry the 2. After the NCI, I'll go to the non-current liability. 10% loan notes. 96 plus 128,000. Current liability 262,400 plus 150,400. That is it. To balance these accounts, what do I need? To balance these accounts, what do I need? Let's see. We want to balance these accounts. I need group structure. After the group structure, I need adjusted retained earnings of subsidiary. After that, I will say as per SOFP, statement of financial position. Then after that, I go to determination of net assets of subsidiary. The next thing, I need to calculate goodwill. Need to calculate the goodwill. It's okay from here, goodwill. Don't forget the formula, cost of investment, at NCI. After adding NCI purchase consideration, net assets at the date of acquisition, then the goodwill. I don't know whether I'll be impairment. I will leave my 2 line space. Again, what do I need to balance this? Okay. What does it need to balance this? I need retained earning. Return of the parent and NCI. I need those 2 figures. Okay, yes, okay. No problem. Retained earning of parent, which is the consolidated retained earning. Then I need NCI, which is the date of acquisition. Date of, but for the POA, I can open it down. Cost of sales is the only thing we do on POA. I'm going to put the cost of sales as I have the space. Open from the cost of sales down. Cost of sales, this is a major calculation we do in the what? In the POL. After I've done that, I can now open another part. Let's use another color for this. Let me pick my pen. Let me use red for the calculation. Then is it? I will say workings. That is it. Let me go back. With this now, I will not be reading and be posting. It makes my job faster in exam. With what I have done, they will give me something. But that is not the basis. The basis is that I need to get to destination on time. In the group, you cannot spend maximum 45 minutes. It's what is our target. Let me use a 50 so I can see. This is everything. POI, statement of financial position. Would they give me mark for doing this? Let's say I submitted this one for you, and it is 30 marks question. How many marks are you going to give me? Let's say this is only what I submitted to you. Are you going to give me something? I'm asking the class. Your network is bad. It's cracking.
I said I will score you 15 over 30.
No, 15. How can you score me 15? Have I done anything? You cannot
Okay,
score
probably
me.
have like 5 or something.
Yes, I can have like from 3 to 4, 5. Depends on the seminar, because all my heading, I've written the formula for goodwill, everything. But that is not the purpose. The purpose is to make the job fast. So that I will not use question 1. So question 1 only. So with this one now, I will not be reading and be posting. Okay. So let me take it to 100%. Anything we need. Good. Now let's look at it. On 1st of April 2017, what happened on that day? 1st of April 2017. Aya Limited acquired 60% of it. Oh, he has given me the date of acquisition. Anyway, 1st April 2017. When are we consolidating? You go and check. We are consolidated September 2017. This is not a year. Because if I can start from April, supposed to end the March, this is during the year acquisition. So, how many months? April, May, June, July, August, September, 6 months. This is 6 months. Oh, during the year acquisition. Don't forget, if it is during the year acquisition, what will happen? No retain any. Nobody will give you retain any. When it is during the year, say, okay, no retain any. At the date of acquisition. That's it. But he told me I acquire 60%. I will post to increase my mark. So, okay, you acquire 60%. Parents, 60%. NCI, 40%. Good. In a share exchange of 2 shares in Ayaya for 3 shares in Lower, Oh, don't forget when it is share consideration, it must be parent over subsidiary. Parent over subsidiary. But I will ask the question. What is the total number of shares that make the 60% you acquire? I cannot know that unless I know the total numbers of shares. I will ask, okay, what is the total numbers of shares in subsidiary? Because of values of shares all over nominal value. What is the values of shares? I will go there. Values of shares is 128,000 with a nominal value of 1. In case the nominal value is not given, I will assume it is 1 naira. So give me 128,000. This 128 is at 100%. 128,000 units of shares. These are 100% in the company. You only acquire 60%. And also to get parent acquire shares, (0.6 times 128). Please, to make it fair, because I want us to do 2 questions this night. Please, who can give me 0.6 times 128 to give us what? Please help your brother.
$76,800.
Thank you, my sister. You acquire 76,800. In a share exchange, so in a share exchange of 2 shares in Ayaya for 3 shares, so must be parent over subsidiary, 2/3 times 76,800. 2/3 times 76,800. What does it give us? Don't forget the rules of share consideration will be applied. What are the rules? Cost of it must be issued at the market price per share of the parent. Unless there is no market price per share of the parent, that of the subsidiary will not be applied. That is 3. If there is no share premium in the question, I must create like this question. Then 4th, what is the accounting entry? Cost of investment must be debited. Equity share must be credited. Share premium must also be credited. That is it. Oh yeah. Unless, okay, no problem. 2/3 times 76,800. What does it give us?
51,200.
Let me ask the class, am I too fast? Am I too fast so I can slow the pace? Am I fast?
The space is okay, sir.
Please, thank you, my brother. I love that. It must be, or should I increase the pace?
It's just normal. It's fine like this.
It must be issued at the market price per shares of the parent. I will ask the question. What is the market price per share of the parent? If you go to the question, say, at the date of acquisition, shares in Aya at the market price of 6 naira. Market price of 6 naira. Also, cost of investment to be debited. 51,200 times the 6 naira. The equity shares now to be credited. 51,200 times the nominal value to give me 51,200. I still create a premium, yes. When we follow the business, it was 1 naira. We are issuing it as 6 naira. That is it. What will I do? It has created a premium. Who has the premium? Don't make mistake. It's the parent that has the premium. The premium does not subsidiary, does not concern, because they were the one that issued. Even when we use the shares market price per shares of the subsidiary to determine the premium. The premiums go to the parents. Share premium. £6 minus £1 that's 51. That's all. What is the cost of investment? 51,206. 51,206. What does it give us?
307,200.
307. 200. 51,200 times 1. 51,200. As it creates a premium, yes. £5 times 51,200. £5 times 51,200. What does it give us? $56,000. The next thing I will ask, has it been recorded? Has it been recorded or not? If it has not been recorded, this is the accounting entry. But if it is not recorded, this is the accounting entry. But if it is recorded, not recorded is the language of a group account. If it is recorded, what is this? Investments. Credits minus cost of investments. That is all if it is recorded. But how do I know it is recorded or not recorded? We have said it before. Say one, when the question is silent, it means it has been recorded. 2, clear. 3, through investigation. These are the 3. Let's see the question now. Only the issue of shares has not yet been recorded by Aya Limited. The issue of the shares has not yet been recorded. I'll record. So you have no record. What am I recording? The accounting entry. 307,200 will be directed to cost of investment. 52,200 will be credited to equity shares and the share premium. It's okay. We have not recorded cost of investments. For the goodwill calculation, we'll go there. 307,200. Equity shares. Or ask the question, what is the equity shares of the parent initially? Share capital. What is the equity shares of the parent? 320. Plus 51,200 credit. There is no share premium. I will create. In exam before your NCI, it's only 2 things that can come here. Share premium, when there is share consideration, other equity components, equity transaction. I will show you, you will see. Share premium 256. That's all. Ask me question. Ask me question. Ask me question. Ask me question, please. Ask me a question. Ask me a question. Next. Additional information one. At the date of acquisition, the fair value of Lua Limited assets were equal to their carried amount, with the exception of plants, which had a fair value of 64 million in excess of the carrying amount, revaluation surplus. 64. I'll go to the PPE. Plus 64. I'll come again. The reserve is a surplus. I'll credit the reserve for the surplus. I'll credit the reserve for the surplus. Items. DOA, DOC, and post. Share capital, 128,000. Retail earning, they will not give me during the year. I will not bother at the date of acquisition. But the one in the book will come 208,000 as per SOLP. 208. 208. Let me clean that. 208. But at acquisition, they will not give me anything. I know. Me too, don't bother to even check because I know you will not give me return any at the date of 208,000. Go to the reserve, I'll say revaluation surplus on plants. 64. If it is planned, there will be a depreciation. What have you done? Let's see. There will be a depreciation problem. So, revaluation surplus of 64 million. PP debit plus 64. Reserves credit. Depreciation 64. What is the useful life of the asset at the date of acquisition? A remaining life of 5 years as at that date, using straight line method, divided by 5, times from the date of acquisition to date we are consolidating, 6/12. It has been established, 6/12. So what does it give us? 64. 64,000 divided by 5 times 6 divided by 12, 6,400. What do I do to the depreciation? I will say PPE, credit minus 64. Then I'll adjust it with the earnings of sub debit minus 64. That's all. That's all.
Sorry. Hello, sir.
Yes,
Hello, sir. Can you
I
hear
can hear
me?
you. I can hear
Sorry,
you.
sir. This investment from this work, this working, this COL, what does it mean, please? After
Cost of
investment credit,
investment.
COL.
Cost of investment. Cost of investment.
All right. Okay. Thank you, sir.
I will just go. Don't forget, depreciation is also part of POL item. Depreciation is a POL item. What do I do? If it is surplus, you add to cost of sales. If it is deficit, you less. Will come here as a depreciation. The deep. Go to minus 64. To the cost of sales now, not to forget. That's why I open it down. My cost of sales. I'll go to the question, what is the parent cost of sales? Say parent. Parent cost of sales. Let's see. Parent cost of sales is 20,2016,000. Sub cost of sales, but he acquired for 6 months. You can only entitle to 96/12. Then the depreciation, which is 64. That is it. That is it. Somebody should give me the figure. 1024.
51,200.
Hmm?
51,200.
51,200. 51K. Half of 512,000. 1,024,000. That is that. For the additional information, one is done. I will go to 2. Sales from lower limited to higher in the post-acquisition period, we have 256,000 sales. Okay? I will ask myself, oh, intergroup sales must be eliminated. You cannot sell to each other. Intragroup, that one I've just read, of 256. I will subtract intergroup sales, and I will go to the revenue to go and remove from the revenue 2. Intergroup sales. You cannot sell to each other. You are a single entity. Or say, what is the revenue of the parents? So, the question. The revenue of the parent is 20,000 plus that of the son. 1,344 times 6/12 minus 256. Intergroup sales, you cannot sell to each other. You are a single entity. But what else? Is there any unsold? You don't realize profit. Okay, in the post-acquisition period, yes. In the post-acquisition period, At a markup, no, you are going to be, sorry, total sales 256,000. Markup 40%. Is there any unsold? We ask the question. Air Limited has sold 166.4. He has sold 166.4. But now say, okay, unsold will now be 256,000 minus the one he has sold. 166,400. Five, 1,600. 89,600. When I say unrealized profit on inventory, now equals to 40 over 140 because it's a markup times 89,600. 40 divided by 140 times 89,600. 25,600. I will ask, who is the seller? Who is the seller? The seller account must be debited minus. Then consolidated inventory. Inventory must be credited. That's all. That's all. That is all. That is all. Don't realize, don't forget to go to the cost of sales. But first of all, debit the seller. Who is the seller? Let's read. Let's identify the seller. Sales of lower limited to higher, lower subsidiary. Why do you sell and make profit from your parents? Or go to the parent account, a subsidiary account, unrealized profit on inventory. Or debit account 25,600. Then I'll go to the consolidated inventory. Oh, minus 25,600. That's all. That's all. I'll now go to my cost of sales. My cost of sales, I'll go there. Say cost of sales. Unrealized profit on inventory. $25,600. That is all. That is all. Mess. Please ask a question, please. Search. Other than where indicated, profit or loss items are deemed to accrue evenly on time basis. That means evenly. Everything we are operating must be evenly distributed. That means there cannot be decimal. It is by two to evenly distribution or the profits, unless otherwise stated, which we have done one. We have done the otherwise, per PSC. Let's go to the question. The question, additional information 4. Lower limited receivable at September 30, 2017 include 19.2 due from Ayaya Limited, which did not agree with Ayaya Limited corresponding trade payable. This was due to a cash in transit of 6.4 from Ayaya Limited to Lower Limited. Can you imagine? It does not agree the extensive cash in transit. It was a trade receivable. Credit. There's a cash. How many total is minus 19,200? The cash in transit, debit plus the cash that is in transit. I'll go and debit. How much is the cash in transit? 6.4, 6,400. I'll now go to the trade payable. Debit minus 19.2 minus 6.4. The difference, you cannot weigh each other. That is all. It can only come out in exam, as I've told you, 3 ways. First way, somebody is shouting. Good. It is markup. When it is markup, it is 40 over 140. If it is 30%, 30 over 130. But if it is margin, 30 over 100. If it is markup, the percentage they give you all the function divided by 100 plus the percentage. That's all. Good. Yes. I'll go and post now. I'll go and post now. It's okay. Where is it? Go to the statement of financial position. Where is it? Minus 19.2. No, you only give me current asset plus 6.4. I'll go to the trade payable. Minus 12.8. Foreign ability. Also. Voilà. That is all. Question 5. Ayaya Limited has a policy of accounting for any non-controlling interest at fair value. For this purpose, the fair value of the goodwill attributed to the non-controlling interest in Lower Limited is 48 million. No, 48. They've given me goodwill attributed to NCI, which is an indicator it is fair value. How do I know it is fair value in exam? The indicators of fair value will be there, but I need to know my net asset at the date of acquisition. How do I know it is fair value? One, market price per share of subsidiary or NCI will be given in the question. That is one. Two, fair value of NCI will be given in the question. Three, fair value of the whole subsidiary will be given in the question. Four, goodwill. Goodwill attributed to NCI will be given. But I cannot calculate the goodwill now when I don't know the net assets. But first go and calculate the net assets. Let's calculate the net assets. What is bringing the net assets not to be calculated? The retained earning. I need to determine the retained earning at the date of acquisition. How do I go about that? I've given you formula. Say K plus. Say retained earning at the date of acquisition plus year ended profits or loss equals to retained earning at SOFP. Retained absolute BK plus year-ended profit or loss. If you go to the P&L, it has 96,000. Times 6/12, we only acquire for 6 months. All over 208,000. Retained at SOFP. K plus 96 times 6/12 will give me 48,000. Equals to 208. K will now equals to 208,000 minus 48. K equals to 160,000. So retained at the date of acquisition is 160. I say if you don't like this, you can also do, I like this. I prefer this, but in case you don't like, I say, oh, what is the retained earning at SOFP? 208,000. Less profit for the year. But this is the retained earning as at 30th September 2017. If I less profit for the year of 96, it will give me the balance brought forward as at retained earning. Balance brought forward as at 1st October 2016. Let's see, 208,000 minus 96, 1112. I will now add pre-acquisition profits, which is 96,000 times 6/12. Both is 6 because it's 6 months. But this one is pre, which is going to give me 48. If I sum 48 plus 112, it will also give me 160,000. This is what is your icon part. Give me return 160,000. Finish.
Yes, sir. So please, can you scroll up? Let's see the
No
previous.
problem. No problem.
Okay.
This is the first one. Or should I do it at 50% so that I can see the two? I hope it is not too tiny, sharp. This is it.
Not really. It's okay, sir.
Can I take it now? Are you okay?
Yes, I'm fine, sir. Thank you.
I'll go to the notes. Okay, no problem. Let's see. I have both retained and the date of acquisition to be 160,000. I will now sum everything up by saying, what is the net asset at the date of acquisition? $160 plus 128 plus 64, 352,000. Now, let me share the third link. He has given me goodwill attributed to NCI. Let's do this one for you. I say when they give you goodwill attributed to NCI, you have two options. You have two options. The first option either they give me goodwill attributed to NCI. Goodwill attributed to NCI was given in the question to be 48,000. I have two options. Two options to determine the total goodwill. Option one, I can get the goodwill of the parents. I will get the goodwill of the parents. Then add it to the NCI. To get the total goodwill. Don't forget, how do I get the goodwill of the parent? I'm using share of proportionate method, SP. Share of proportionate method can be done in two ways. I can either use the long one. I say, okay, let me get the goodwill of the parent now. So let me change this one. I don't like this color. Now, cost of investment, okay, this one is better, which is 307,200. I will add NCI 0.4 times 352,000. .4 times 352, which is going to give me 140, 800, plus 307, 200. Purchase consideration now will give me 448,000. Then I will less the net asset at date of acquisition, which is 352. Net assets, DOA, 352. 352,000. The goodwill of the parents at acquisition will not give me 96,000. This is it. Of parents. Don't forget they've given me that of the NCI. But I can also use shorter method, or to get a shorter method of the goodwill, which is the cost of investments, 307, 200. I will remove parent portion, 0.6 times 352. 0.6 times 35K. 221. 211. 200. Minus 207. 200. It will give me 96,000. This is the parent goodwill. This is it. But they've given me that of the NCI to be 48. I will now say total goodwill now to be reported. A DOC. Because I said there was no impairment. Parent goodwill. $96,000. NCI goodwill. Given already in the question, 48,000. Total 144. That is it. That is it. 144. This is the option 1. For the option 2, I can get NCI at fair value. For the option 2, I'll get NCI at fair value, which is the combination or addition of NCI percentage on net assets, the date of acquisition, plus goodwill attributed to NCI. As of NCI at fair value now. You see, goodwill for NCI 48,000 plus NCI percentage on net assets, the date of acquisition, which is 0.4 times 352. 0.4 times 352. 0.4 times 352. 14800. 14800. Or say 48,000 plus 14800. That's all. Let's add. 48,000 plus 140. This will not give NCI at fair value. 188,800. Essentially at fair value, I'll now add to the cost of investments for the goodwill calculation. Is it okay? Yes, so plus 188,800 plus Use 200. 196,000 minus 352. So the goodwill. That's all. We'll go to the statement of financial position. Goodwill to be reported. Goodwill. 144,000. No impairment. That is all. Any question from you? Any question from me? Any question from me? With this, I can now consolidate. Let's add the PPE. Give me the figure for the PPE. What is the figure for the PPE? So that we can move to the next question. PPE 129,200. Yeah, please give me figure. Help your brother. We would want to give figure. Okay. 129,200. Yes. 103. 200 plus 64 plus minus 176. Thousand. Current assets. 512,000 plus 200 plus 35,600 minus 1 minus 35,600 minus 19,200. Is 19,200 plus 68 or 800. Let's go to the, let me share profits. Two or 8,000 minus 64 minus 25,600, 176,000. 176,000. I'll take it to the post, net assets. $128. 176,000. 64. 176 minus 160. 160 will give me 16. I will now share it between the parent and SCI. As per SOFP, Share profit. 0.6 times 16,000. As per SOP, what is the SOP? One, 1,132, 1,132, 800. Sharp profit now. 0.6 times 16,000. 96. Plus 1,132, 800. I'll give you 1,142, 200. 1,142. Go and report return. 1,142, 400. 1,1. Yep. 1,142, 400. Share capital 320 plus 51,200. 371,200. NCI, we have not shared profits. NCI at the date of acquisition 188,800. Share profit 0.4 times 16,000. 0.4 times 1,664. 188,800 plus 195,200. This year, 195,200. Immediately I finish with the statement of financial position, that's the end. 195,200. For the loan notes, 96,000 plus 128,000, 222. 224,000. This is 200 plus 150, 400 minus 12,8, 100,000. You can add it. Let's say 371, 200 plus 1,142, 400 plus 256 plus 195, 200 plus 2 plus 400,000 25. Next, total assets 1760 plus 144 plus 684 800. That is it. That is it. That is it. I'll now go to the POL. Go to the POL. Later, I finish the student financial position. POL is nothing. One, 344,000 times 6 divided by 12 plus 272 minus 256,000. Revenue will give me 316, 36. I'll go to the cost of sales. In POL, the major calculation is the cost of sales. Unless you want to tell me about investments, anyway, I'm going to plus 7,200 plus I'm doing good with result cost of sales. What is all? 016 plus 512 plus 6 minus 256 plus 25 204. Cost of sales 2304. Cost of sales 2304. Three 136 minus 2304. The gross profits 832. Distribution cost. What is the distribution cost of the parents? 64,000. Plus soap 64. $4,000 and 6 divided by 12. 32 plus 64. 96. Distribution is 96,000. Admin expenses. What is the admin 192 parents plus that of the sub. One 102, 102,000, 192, 102,000 and 6 divided by 51,000. 51 plus 192,000, 243. That's finance costs. 696 plus 12.8. F8 and 6 divided by 12 plus 96, 16,000. So now give me profit before tax. 832 minus 96,000 minus 243 minus 16. Profit before tax, 477,000. Tax, 150,400. 150,400. 44. Into 400 plus 150 on this 172 minus 304. Profit for the year. Less we say profits contributed to this year. This year, click the post. Really, pick the post. This one. That is it. Next. Ask me question. Ask me question. If a student has gone to sleep with it. Hello?
Yes, sir. We're still here.
Ask me question. Can I clean? Can I clean?
No,
Students? Questions?
there's that driver. I think what was like is it? No, I knew I was going to catch him because the traffic will soon catch up with him too. No, it's all this what do they call it? All this
Yes. How many questions have we done on simple group? How many questions have we done on simple group? I remember. Yeah. Read any question. On the material. On the material we send. Any question of your interest? Oh, yeah, yeah. So any question you want us to do? Are we together? Are we together?
We are together, sir.
Pick any question of your choice. You have the material with you?
The list of questions we have, ma.
Yes.
Okay. Alright, sir. Just a minute. So can we do question 5?
What's the name? What is the name of the
Hello, sir.
question? Hmm?
PEP.
DEP.
PEP. Question 5.
E. E. Question for, and who?
That's
Who is
it.
the
That's just a
subsidiary?
name. Oh, okay. Pep PSC acquires 75%
We
of
have done SPEP now.
Mao.
We
Sir,
have done that now.
we've done this.
Have we not done PEP?
No, we've not.
We have done
Are
purple.
you serious now?
Let's do FFO and FFK, sir.
Finance, sir. Look very well. oh. FFK and FFO. No problem. Both.
Hello?
Yes.
I know this one.
I think
Which one is
that's the
explained
last
again?
one. That's the last
So
on
question 6.
That's the last
Yes, it
question.
is.
What's the name of the question,
I
sir,
told you
please?
that the money in my account was what I now moved out so that if they want to see my account, they will not see money.
Which
We are
account?
talking about another thing. No. Okay, is talking about another thing.
This guy got it.
Which,
That was the money in my account, and I had to empty my account so that they will not see anything there. That was what I did.
which account?
I know you can always run away with my money. With my money I had many options, but I know
Somebody
that
else is talking.
Can we do question 3?
they open eye for me.
Byron
Not say
PLC.
the name. What is the name?
My friends now, the guys.
Byron
TikTok
PLC
stories.
and
But if I send it to
Belinta
you,
PLC.
Huh?
at least I'll go.
Byron
Even though you have warned me that before I send
Have
you
you not
money,
done a baron?
but I just dropped that message, whether you're online or not, I'll move the money
Tell
to
that
your
person
account.
that is calling to let us to mute himself.
Then we've done everything there.
Have you not done baron?
Hello, sister. Have you done Byron? She's left.
I can't remember if we done Baron.
Okay, baron PSC.
I don't think we done Baron.
Look very well. I thought we have done baron.
So we've not
Sir,
done Byron.
can we do Watimagbo and Warisi?
That one is very simple. We have not done that.
Very simple. Okay. Then let's do Baron, sir.
Baron, finance.
Let's do Byron.
Let's go to baron. Control S. Baron PSC. Baron PSC. This one. Baron PSC. Somebody chief. I'm coming.
Somebody read.
I've not done my, we'll do it now. Then we start investment in associates. Who is an associate? We'll start investment in associates next week and so. Then we know we are in corporate reporting. Okay. Baron and Valletta. What's your take? Baron acquired 3 million equity shares. We should prepare a consolidated good. I'll open the account. Let me prepare the consolidated. I'll open the accounts. Baron pays. I'll say Baron. Consolidated. That's at assets. Asset match. No current assets. PP. $79,000 plus 55. Investments. Valletta. 1,900. Goodwill. I leave 2 line space. I'll go to the current assets. Inventory. $5,000 portfolios. Nice. Trade receivable. $14,000. Bank. We'll go to the equities and liability. Share capital. Share premium. Then the equity component, NCR, no current liability, 12% loan notes. It's 3,000 plus 41. Deferred tax, current liability, $34,000 plus 26. Income tax, $14,000. Good. After that is done. Now, for me to balance this account, what do I need? I need good structure. Just earnings.
I can't hear you. Your voice is low.
I've not been saying anything. I'm just writing. So you can see what I'm writing.
All right, sir. All right, sir.
I'm just opening the account as per SOP. Determination of net assets of subsidiaries. Items, DOA, DOC, post. I need to calculate the goodwill. Then of the parents, NCI, that is the end of the question. I will now start reading and be post. Foreign PSC acquired 3 million equity shares in Valletta on 1st April 2003 for 51,000. Good. He has given me date of acquisition. He has told me when he acquired 3 million. I will say out of how many? Total numbers of shares in subsidiary. Cost of values of shares all over number. What is the shares in Valletta? I will go and check. 8 million at a nominal value of 2 naira. Whatever 2 naira, 4 million. We only acquire 3 million, 2,000, over 4,000, and it's 100, 75%. Parents, 75%. NCR, 25%. On which day does he acquire? So on 1st of April 2000, date of acquisition. 1st of April 2003. When are we consolidating? 31st of March 2005, 2 years. Date of consolidation. 31st March 2005, 2 years accounts. This is it. I can post. Parents, 75%. NCR, as it said, for 51,000, has it been recorded? Cost of investment, yes. It's in the financial statement. When it is recorded, what's my own duty? Credit investment. To go and debit cost of investment for goodwill calculation. That's all. Say when the retail earning or pick the shares. What is the shares in subsidiary? 8,000. Or pick the share premium. Where I pick the shares, 9,000. Retail earning at acquisition, 28,000. Other equity components, 8,000. But other equity, quickly go to the SOFP. What is the other equity? 10,000. 2,000 plus. As per SOFP, what was in the return of the parents and that of the subsidiary? 44,900. So 44,900. That of the parents and 65,000. That's it. So far, so good. This is what he has said.
Hello, sir.
Yes.
So that retained earning of 28,000, how did you get it, sir?
At date of acquisition, giving you additional, giving you the notes, beginning. Really at the beginning, you will see it. Because it's more than 1 year. It is not doing the year, they'll give you the year, unless it is doing the acquisition. Question has given me, have you seen it?
I'm still trying to look for it, sir.
Go to at the beginning of the question. Said,
Okay. I was looking at the additional information. I've seen it, sir.
no problem. Next, the fair value exercise of Valeta property plan produce the following. Good. On 1st of April, land, not depreciable property, had a fair value of 4 million in excess of the carrying amounts as at the date of acquisition. Land, evaluation surplus of land. No issue. It's okay. There's a revaluation surplus on land of 4 million. I will debit the PPE straight. Every diet used to be there. I will debit the PPE. $4,000. Now, as at the first month, the fair value surplus has increased further by 1,000. As at the year end, has increased further. I will debit the PPE. Credit reserve and DOC with 5,000. $5,000 minus 4,000. Yes. It has increased further. I will not put 1,000. I will put everything. 4,000 plus 1, 5,000 is what is adduced. That's the end for that. On April, building with a carry amount of 95 had a fair value of 27. Oh, I'll compare. You are giving me the carry amount. You have given me the carry amount and the fair value. What is the carry amount of the building? 19.5. And the fair value, 27. So there is a surplus on the building. What is the surplus now?
Seven five, sir.
1.5. What do I do to the surplus? PPE. Debit, 7.5. Reserves. Depreciation. Because it's building. $50 years. 7.5 divided by 15 times from the date of acquisition. Today we are consolidating. That's all. For the depreciation, how much is the value?
$1,000, sir.
1,000. 1,000. I will say PPE. Credit. adjusted return of sub debit. That's all. Just go to the financial statements and post my figure. Valuation surplus on building. 7.5. We'll go to plus 7.5 minus 1,000 depreciation. We have used 1,000. Nice. Yeah. Adjusted return. Depreciation. That's all. Nice. It is the group to measure non-controlling interest at position using the full good method. For this purpose, the fair value of Valeta, fair value of the whole subsidiary, was estimated to be 66,000. Fair value of NCI is not what is given. It's a fair value of the whole subsidiary. So I can determine NCI 66,000. 16,500. The fair value of the whole company, 66,000. You not buy 100% of the company. You only buy 75. NCI will now be 0.25 times the fair value of the whole. $68. Yeah. That's all. During the year ended, investment, Valeta sold goods amounting to 14 million to Baron. Yes. Valeta sold goods to all customers, including group member at a cost plus 25%. As of March 2005, only 40% of this goods has been sold. 40% has been sold. That means 60% remain unsold. So unrealized profit on inventory. Total sales. Total sales is 14,000. Unsold. Forty percent of this goods has been sold. That means 60% is unsold. $3,400. Markup 25%. Markup is 25%. So unrealized profits on inventory. That is it. That is it. Who is the seller? Who is the seller?
1680.
1,
1680.
who is the seller?
Valeta is the seller.
Subsidiaries. How do you sell and make profits? Seller's accounts. Valeta is seller. Okay. Still not come. Consolidated inventory. Okay. A minute. Let me push what that was. Hmm? That is it. Nice. The payable of Baron pays Maxwell includes 2.2 payables to Valeta. Agree to OE. Nothing in transit. Payment test at 31st review that consolidated good has been paid by 23.08%. It is fair value, but we don't know the value of the good yet. They said the payment is 23.08%. No problem. Payment. %. Nice. What is this not good way? I have not know, yes. Next. What is the next? What is the next? Prepare. That's the end. So we should prepare. I will sum the net assets. Give me a figure. What is it? Net assets. What is the net assets? 8,000 plus 9,000. Stage of you to help us.
64,500.
What is it?
64,500.
$64. What is the goodwill?
Three nine.
Eh?
3,900.
Impairments now. How much is the value of the impairments? For 3% of
900. Approximately 900.
so the goodwill to be reported. That is the goodwill adduced. Yes. Okay. I better go and sum to the meaning now. I'm tired. Impairment now there will be shares, it's fair value. 0.75. Impairments. Then you can get you can go through the solution. Anyone that is not clear, you shout me on this platform or you shout me personally. I have sent all the solution. So next we are meeting investment in associates. Any issue? Any issue?
Hello, sir.
Yes.
There is no issue, but can you share this note with us because the workings here is not complete. Because I'm trying to compare it with what I have here. The solutions you sent to us.
Which solution? The
The
work
one you
is
said, the workings, yes,
complete
it's
now.
not complete.
Okay, I will send.
Yes.
That this one will not complete. But you get the answer.
Yeah, I know I'll get the answers because there are some that I'm seeing here that you are solving here that is not on the solution.
Okay, you need this one too.
Yes, sir.
No problem.
All right.
Mm.